Welcome back, everyone. I hope you're having a great day. And in this episode, we're going to take a look at two brand new ETFs that are designed to track portfolios that have beaten the S&P 500 over the past 5 years. These ETFs have just launched, and one of the portfolios they track is that of Nancy Pelosi. We all know Nancy. She's become very popular in the stock market community over the past few years because her portfolio has been continuously beating the S&P 500. She has now become the face of many Wall Street memes and is the focus of a ton of Reddit stock trading groups. All over the internet, investors are tracking her trades in order to try to share in the outperformance. And we can see from this chart that over the past 4 years, a $100 investment in the Pelosi portfolio would have turned into $196. Compared to an investment in the S&P 500 over that same period, that $100 would have only grown to $173. And it's not just Nancy Pelosi. There are a ton of members of Congress who are reporting market-beating performance each and every year, and of course there's a ton of speculation regarding insider trading and the information congressmen have access to during their work in Congress. But that's the focus of a different video. In this episode, we're going to take a look at two brand new ETFs that have just launched. They are known as the Congress ETFs and are designed to track the portfolios of the Democrats and the Republicans. So in this episode, we're going to take a look at these two brand new ETFs, go over their current holdings and the investment thesis, and whether or not I will be adding them to my portfolio in the future. But before we do that, I am going to ask you to please hit that like button and subscribe. I'm the Gen Z Investor, and on this channel, of course, we talk about the stock market, go over any major market news, and we track the progress of my personal portfolio that now trades at $183,000. So please hit that like button and subscribe. And of course, today we're going to focus on Congress and the launch of the two brand new ETFs, which are designed to allow everyday investors like you and I the ability to invest our hard-earned money into the market in the same manner as our elected officials. And now if we jump into the article, we can see that the two new ETFs are aiming to mimic the portfolios of members of Congress on both sides of the aisle. On Tuesday, investment firm Subversive Capital Advisor and the data hub Unusual Whales launched two brand new ETFs, one's tracking the portfolio of Democrats and the other for Republicans. The fund tracking the Democrats is now going to be trading under ticker NANC, which of course is a nod to Nancy Pelosi, while the fund trading representing the Republicans trades under ticker KRUZ, presumably a reference to Senator Ted Cruz. The ETF investments are based on the disclosed activity of any serving lawmaker as well as their families. So of course we've also seen headlines where Nancy Pelosi's husband has seen incredible market performance and some very suspicious market timing. So this portfolio in these ETFs also includes the trading activity of the spouses of any serving lawmaker. So it's not just Nancy Pelosi, but it's also her husband, and that goes for all the men and women of Congress. And with both of these funds, you're going to get an expense ratio of 0.75%, which of course you have to understand this is an actively managed fund. So the 0.75% pretty much is in line with all the new actively managed funds on the market. Next, we're going to take a look at each ETF with a little more detail and go over the underlying positions within each fund. So first, if we start off with the Democratic Trading ETF, ticker NANC, we can see it closed after its first trading session at $25.47. These ETFs both opened for $25 per share when they hit the market. So this fund grew 1.8% on its first day of trading, which of course was helped because the overall market had a green day as well, which of course helps boost up the performance of this individual ETF. And now if we jump over to the fund fact sheet, we can see the largest holding in the Democratic fund includes Microsoft, Amazon, and Google to round out the top three, making up around 20% of the total ETF. This fund is very top heavy in the tech sector. We can see they also own Apple, Salesforce, and Nvidia to wrap up the top 6. Then there is Disney, CrowdStrike, Philip Morris, and United Parcel Service closing out the top 10. So overall, the top 10 holdings within the ETF make up around 35% of the total weight, but overall you're getting diversification into 750 to 800 individual holdings or positions within the fund. Of course, this number will fluctuate based on the underlying trading or the buys and sells based on the Democratic Party, but overall you're getting around 35% of the ETF's allocation within these top 10 stocks. So overall, this was the Democratic ETF. We can see very tech focused, very top heavy into these big focus companies that make up the largest names of the S&P 500. But now if we continue on and take a look at the Republic ETF that trades under ticker KRUZ, we can see it closed after their first trading session at $25.27. It was up 1% for the day. And if we jump over to the fact sheet for the Republicans, they have a very different allocation for their positions. We can see they also own less companies, between 550 and 600, compared to the 750 to 800 we saw for the Democrats. And now if we take a look at the top 10 holdings, there is a ton of differences between political parties. If we take a look at the Republicans, they're not really tech focused. Like we saw with the Democrats, around 30% of the top 10 holdings was focused on the tech sector. Well, if we take a look at the Republicans, we can see Microsoft really makes up the only significant tech player within the top 10, Accenture at 1.5% as well. And if we take a look at these holdings, a lot more energy, pipeline-focused businesses like Magellan Midstream Partners, like Energy Transfer LP, and of course there's not a ton of focus on the big name companies of the S&P 500. No Nvidia, no Apple, some big names that are not included in the top 10 positions from the Republican Party. And we can also see Philip Morris and Microsoft are the only two companies that overlap in terms of being a position in both the top 10 for the Democrats and the Republicans. We also have Accenture, Las Vegas Sands Corporation, so a casino company making up 1.53% of the fund. And one thing I also noticed taking a look at these top 10 holdings, the Republicans have less positions within their portfolio, and they're also less top heavy. Only around 16 to 17% of the total allocation of the ETF is within the top 10 holdings. The largest position comes in at only 3.57% compared to the Democrats, where their largest position was worth over 7% of the ETF. We can see the top 5 positions individually in the Democrats' portfolio is worth more in terms of weighting in the ETF compared to the largest for the Republicans. So I believe the Republicans are a lot less concentrated, have their money more spread out across their individual holdings, maybe a little bit better, less concentrated into one or two big players. And we can see they also have concentration into many different areas of the market rather than just tech and consumer behavior. So overall, we can see there is a lot of contrast between both political parties in terms of where they have their capital invested at this current point in time. So if you don't really want to play politics, an idea or a potential strategy would be to own both. Get exposure to what both sides of the aisle are doing, and of course that speculative inside information does hit both sides, so who knows which one will outperform going forward, but at least with having these two funds trading on the market, it'll be very easy to see or track which political party is doing better relative to who's in power at that current point in time. And going forward, these are definitely two ETFs I will keep my eye on. I of course have not added them to my portfolio just yet. If I do, I will update you in a future video. But when I came across the article outlining that these two funds have just launched, I looked into them a bit. I thought they had a very interesting premise and I want to share with them to you as my audience. Of course, let me know down in the comments if you plan to add either of these funds to your portfolio, if you prefer one portfolio over the other. No political beliefs, just regarding the underlying stock positions. Let me know down below, and I appreciate you staying tuned all the way to the end, and I will see you in the next video.